Hey everyone, this is Robert with goldsilverpros.com, and I have a very special guest today. His name is Lior Gantz, and he owns Wealth Research Group, which is a website dedicated to helping people understand their portfolios and invest in the marketplace. And he's here to talk about a very special website he has up, wealthresearchgroup.com/ratio, to talk about the precious metals. Lior, how are you doing today?
I'm doing well, sir. Thank you for having me.
So thanks for joining us. I know it's late in your time. Can you tell us a little bit about your background for our viewers?
Yeah. When I was 13, my father his business went bankrupt. And that's when I basically started working, babysitting. I upsold the parents from the sitters to coach basketball to the kids, and then painted decks, did whatever I could. By the time I'm 16, I have like 20 grand in today's money saved up. So this is like 1997 that I started. And then in 2000, I have this money saved up. And my banker, I'm a minor, my banker says, hey, why don't you get your parents to sign a waiver and you can start investing and trading stocks. This is June 2000, 3 months after the dot-com bubble burst. So in hindsight, a very good time to get into the markets. And I did. And I just started reading a lot of books because I asked, well, how can I learn about investing? And he said, well, here are the best people that have ever invested, Warren Buffett, Peter Lynch, etc. This is the year 2000. So I'm starting to read these books, and I can't believe all these books are like, $20, $30, $40, and you can read what these billionaires think, etc. So that concept of just reading a lot appealed to me very early on, and that's how I got into investing. I got into precious metals later. While the Lehman Brothers moment happened, on the Lehman Brothers weekend, this is September 2008, I'm with no reception, no cell reception. I'm river rafting for 4 days in Colorado. I come out of that thing and, all hell breaks loose. Like I opened the phone up and it's plastered with everything that's happening. That's when I got into precious metals at the age of 24. Okay. And Wealth Research Group was founded in January 2016. So literally after the Fed hiked for the first time in December 2015, I thought it was the bottom for the gold prices. I said, look, I have something to say here. And I started a free financial newsletter with the idea that the rising tide lifts all boats. And what we talk about in wealthresearchgroup.com in the newsletter is macro stuff, but then also specific opportunities within many sectors, but primarily in the precious metals.
So it's interesting, Lior, that you mentioned how you got into gold and silver by first going through the macro. I think that's how a lot of us get into this, into the precious metal space. Given what we've got going on right now, it seems like a slowdown in the world economy. I think only partially due to COVID. I think it's a catalyst, but not the main cause. What's your thoughts on what's going on right now? Do you see this continuing to go on, or what's your opinion?
Great question. So a normal cycle in the past century happens like this. The banks are fearful that lenders have overextended. They start to contract credit contracts, profits contract, the stock market falls, people get fired, income goes down, spending goes down. America's in a recession, the rest of the world gets sick with it, right? That's a normal thing. And then there's a straightforward solution. You expand credit, you expand profits, stock market recovers, people get hired, etc. This time around, you don't have that. You have an expansion of credit right now. Nothing is getting contracted. There's an expansion of credit. What there's a lack of is income. There's 20 million people on the streets that are not working, whereas 20 million more people, right? So there's an income shortage. And what the government's doing is it fills that gap. It fills that hole because you have an economy that works 70% on spending. And people are not spending because they're not making anything. So this is not a classic scenario. And these programs are going to last about until August. So in August, we're basically going to go back to square one. We will see where we are with unemployment. And then we will have to figure this out. Now, why is the market all of a sudden, why is the market recovering so fast from the March lows? Well, there's two reasons for that. The S&P 500 is 500 companies, right? So those 500 companies are actually getting exposure. 50% of their profits come outside the U.S. That's one thing that's important to understand. They're not domestic. They're not just primarily working like small business America in America. And secondly, they have access to cheap credit, cheap loans. So basically, the market, the S&P 500 is more valuable today than it was a few weeks ago. The reason is it's eating up small business America. So yes, the S&P 500 is rallying because it's gobbling up small businesses in terms of their clients, etc. But the economy itself is shrinking. So that's the disparity that everyone seems to be confused about. Remember, the S&P 500 is only 500 companies. Half of America is half of the income from America is small businesses. So America is hurting. The real economy is hurting. America has this gift of printing money that other economies do not have, or do not have the extent that the U.S. has, because 50% of the dollars get shipped outside of the U.S. We have to remember that. That's why inflation can stay relatively low while you abuse the currency. So when you look at this, this is what I like to call an income mismatch. You have a situation where this economy is in a few months, in August, is going to be in a situation where there's going to be a lack of real income for the average person. Spending is going to dry up. And you cannot print the same amount that you've just printed. The Fed's balance sheet is already 33% of the U.S. GDP. It just cannot work more than that. So what's going to happen? The government's going to be much more important, and we're coming into an election. This is a huge perfect storm. That's why, as we're doing this interview, gold futures are over 1,800 already.
Yeah, you mentioned the gold futures. They have gone up from 1190, I think, in Q4 2018 now to $1,800 range. That's a huge jump in a very short period of time, and a huge retracement almost all the way back to 2011 highs when we had the last crisis. And so are we in the crisis now? Are we seeing the end of this crisis, or do you think it's going to extend and get worse in the next, say, a couple of years?
So define when you say crisis, what do you mean? A debt crisis? Okay. So
yep.
With the U.S. Debt crisis, I think the real crisis, what the gold community, the gold, silver advocates, etc., the people that have a lot of gold disproportionate to their net worth or portfolio, they're always worried about the national debt, and they're rightfully worried about the national debt. But the timing of when this thing becomes a real problem at the forefront, of global economy, it doesn't have to be tomorrow, and it doesn't have to. It's 23 trillion is not something to laugh about, but it's just not going to happen tomorrow, and people need to understand that. And so when you ask me about when will this debt crisis happen, to me, always the answer has been it's irrelevant when. If it's in 2 years or 3 years or 5 or 10 years, because my strategy would continue to be the same. I need to own an X amount of precious metals compared to my present net worth at all times. And so what I did, I just converted 2 years worth of my life, my burning expenses. So let's say my family uses up $5,000 a month in terms of living expenses, then 24 times that, so 24 months, that's $120,000 in this theoretical example. I converted into physical precious metals. If there's a depression, a 2-year depression, I have my purchasing power locked in that. So that's has always been my thinking, whether it's tomorrow or the next day. Why is that a good rationale? Think about this. Precious metals, or gold specifically, has outperformed since 1971, since 1999, and since 2011. It outperformed bonds and outperformed cash. So you're basically getting paid to wait. Remember, you're not comparing stocks to gold. That's the bogus idea behind Warren Buffett, where he always compares, hey, here's gold, here's stocks, that's why I'm a billionaire. That's true if you compare the both of them. But here's where Berkshire Hathaway could have been much, much richer. He has $128 billion in cash and cash equivalents. If half of that was in gold, Berkshire Hathaway would have already been the biggest company on the planet, bigger than Apple. If you go back like 64 years, every dollar that is in a situation where it's liquid, if it would have been in precious metals instead. So think about that, and that's really where the game is played. You have to figure out what's the best form of liquid money and what's the best form of safe haven. Both have proven to be under the fiat monetary system, where gold is not fixed to a price in fiat currency, where it's trading freely. That has always been the best scenario.
So I think you outlined perfectly the case for gold, and I think you talked about its returns against other investments. I want to turn to silver now. That's a little bit of a different animal, I think. What's your thought on silver?
So I recently did an interview, and I said what I really think about silver, and the silver community didn't like that much. So, but here's the thing about silver: half of silver compared to gold, half of silver is industrial uses. Half of the buying, half of the demand. That's not the case with gold. Gold is a monetary metal, pure and outright. There, you have jewelry demand and whatnot, but for the most part, it is investors buying gold because they want discrete. They're afraid of the counterparty risk of every other safe haven. They are looking for gold because it has a 5,000-year history of protecting its purchase. Silver has changed in the 20th and 20th century into a industrial metal predominantly. And therefore, what I do with silver is I use it more as a trading vehicle. When silver traded for $11.99 spot price in the March lows, that was a great time to get into, for example, silver miners or silver options, because silver is much more volatile. Case in point, it's up more than 50% since that time. But if you look at the long-term returns for gold and silver, gold has outperformed silver since 1971. It's not debatable, it's a fact. So silver is much more of a, here are precious metals, and they're right now in this situation where such and such is happening. Silver can do better than gold. Why don't I trade that exposure? There's a few ways to do it. But for me, gold is more of the, here's my ultimate safe haven, where silver is more of a hedge for inflation, or what I like to call surprise inflation. In other words, when inflation doesn't just go up, but it goes up more than the consensus, that's when silver really starts to pick up. You saw that in any other occasion where silver became an insanely profitable investment in the 1970s, early 2000s, 2009. And so that's more of my take on silver. Because of the industrial demand, the incentive for the miners will always be to compress its price down, because that's how every other commodity works, right? You want to sell for the cheapest amount because that's how you get more market share. And then silver investors get in there and they're willing to pay much more than the mining cost. And that's where you get those huge premiums above the mining cost. When do these investors get in? When there's a real fear of surprise inflation, like you saw in the 70s or in 2009 through 2011. So that's my take on silver.
No, it's a good take, and I think silver is often the poor man's gold. So when people do worry about inflation, a lot of times they may invest in silver if they can't afford gold. And I do have a lot of subscribers that tell me that, I can't afford an ounce of gold at this time. What can I get into? And it's like, well, when I agree with you, when silver had gone down to about $11 or $12 an ounce, it made sense to get into silver at that time. And that was a good way for people to get exposure to the precious metals. Last question I want to have for you today, Lior, is to talk about and this is what I ask all my guests, what do you think is going to happen for the rest of 2020? Do you have any ideas about what you're looking at going forward, what you think may occur in the economy?
Okay, so, to pinpoint something for a calendar year, so in the past 100 years, the S&P 500 has returned 8% a year, okay? 4 years out of the 100, the S&P 500 has actually returned that average of 8%. All the other years, all the other 96, it's either been 20, 15, 18, or minus 20, etc. It's like holding one hand in hot boiling water and one hand in freezing ice, and the average is great temperature, mild temperature water. That's 8%, but it doesn't happen in real life. So that's the idea of what's going to happen for a calendar year is kind of hard to predict. Here are things that we know, right?
Mhm.
In August, these programs are going to expire in terms of like how much money the government has paid for these. So in August, we know there's a big debate that's going to happen in Congress and in the central bank. What will we do next? Okay, and that will depend on where the economy is. If the consumers feel more confident to get out, and if any unforeseen thing happens from here until then with COVID-19, which in my opinion was greatly overestimated from day one in terms of what it is from a health perspective. Okay, and then you have the elections. So those are the two main knowns, and it to me, a Trump victory means a lot of things that I can assess because I know what Trump already is from the past 4 years. A Biden win is more of an unknown. What will happen? And so on a Biden victory, I believe gold will get to that 2000 mark earlier. On a Trump victory, it will happen more gradually. In both scenarios, I don't see a situation where gold is not trading at new all-time highs and above 2000 in the next year or two. Reason, and this is my most important reason. On April 1st, 2019, when gold was 1,281 an ounce, Basel III changed the status to Tier 1.
Mhm.
Gold from being a Tier 3 investment or safe haven is turned into a Tier 1. That means that the collaterals change from 50% to 100%. In other words, what the BIS said was, we believe gold is worth about double of what it's trading at today. And that was 1281. So you have the world central bank saying, hey, gold is worth probably $2,500 and $84 an ounce, because that's 1291 times 2. So that is literally the head of the banking world telling you, we feel gold is much more valuable. That was before COVID-19 happened and changed the whole money supply, and a lot of things have changed. So in my opinion, gold will continue being a phenomenal safe haven. And then, 4, 5, 6 years down the road, when we need to restructure debt, that's the next step. We've lowered interest rates that are not going to come back up, not because governments cannot pay the interest, because corporations and households cannot afford to live in a world with higher interest rates. So that's the real reason. And you can look back at December 2018, when the Fed said, hey, we're going to shrink the balance sheet, we're going to raise interest rates. What happened? It's not the government that got into trouble, it's corporations. It's the S&P 500. So that's number one. Low rates are going to be here to stay. Secondly, the government cannot stop spending. So QE is going to be here to stay. They will need to monetize bond. They're already talking about yield curve control. What is the next phase in monetary policy above and beyond lowering interest rates to zero and fixing them there and doing QE? The next thing is debt restructuring. So that's what's coming next. And then if need be, the fourth thing would be currency devaluation, outright currency devaluation. There is nothing that I said that is counterproductive to gold.
Yeah, I think you, once again, have outlined the case for gold. And thank you so much on your outline of what's next in the economy and getting so detailed with that. I think for the reasons that you stated, the next 6 months, year to 2 years is going to be very, very interesting in the markets. So I think we'll have, lots to talk about. Thank you so much, Lior, for joining us. I do appreciate it. Have a great one.